Hello and welcome to Blytheway Business News. I am Bonnie Hughes. Our guest today is Central Asia Metals. Very interesting company. It's one of the few mining companies that actually pay out a dividend, which is currently around a yield of 6.9%. And their target is between 30 to 50% of their free cash flow. They also have a profit, and they also have a very interesting projects going forward. And here to tell us all about the company is Nigel Robinson, CEO. Hello, Nigel, and thank you for joining us.
Hi, Bonnie.
So you just put out your 2018 operational update and you reached the upper end of guidance. Were you satisfied with the results?
Absolutely we were, Bonnie. They were good results for us. This was the first year that we'd operated both Kounrad and the Sasa project, first full year for Sasa, having acquired it in November 2017. So with all the changes at Sasa in terms of management changes and trying to integrate the project, we're delighted that we could actually come in at the top end of the production range for both projects. So Kounrad came in at just over 14,000 tonnes of cathode copper, and Sasa came in 22,500 tonnes there or thereabouts of zinc in concentrate, and nearly just over 29,000 tonnes of lead in concentrate. So that was towards the upper end of our guidance, and as I say, with that kind of change going on in the mine, they were very pleased with the results for the year.
And you're still one of the lowest cost producers in the industry as well.
Absolutely, yes. Yeah.
And are you able to do that because of the type of projects that you have?
Yeah, I mean, at Kounrad, I think it's well advertised that it's one of the lowest cost copper projects in the world because it's in situ dump leach. We don't move any ore, so we've no expensive mining equipment on site, and it is a low-cost operation and well-established low-cost operation. The thing that attracted us to Sasa was also the low-cost nature of the operations, both from an operational point of view and also from the capital side of things. And we've seen that through the course of the year. Some inflationary pressures here and there, but overall, the outturn, which we'll announce in April for the financial numbers, the indications at the moment that it's very much in line in terms of being a low-cost operation. Not quite as low cost as Kounrad, but certainly close to the lowest quartile in terms of the zinc cash cost around the world. So that's where we like to operate, and we're satisfied with that.
In your operational update, you made a comment that you are also looking at other opportunities. Can you give us some idea about those?
I can't really give details, obviously, because some of it's confidential and some of it's maybe early stage looking at opportunities. And in fact, most of it is fairly early stage, I have to say, because most of last year we focused on integrating Sasa into our operation. We did, however, do 3 site visits. We did about 4 exercises where we went down into reasonable levels of due diligence. And the operations themselves that we're looking at tend to be not exploration projects, but more further down the development curve. A couple in Kazakhstan and a couple around other parts of the world that we're looking at the moment. And the intention certainly for this year is to re-energise that focus back to business development so that we can start to regrow the business from having integrated Sasa into our operations.
And is the strategy to increase your growth profile going forward? Is that the purpose of looking at other opportunities?
Absolutely, yeah. In a sensible manner, it's got to be in the right jurisdiction. The actual opportunity has to make sense from us from a balance sheet point of view in terms of the way we operate in terms of being accretive to shareholders and being able to maintain our dividend policy with our shareholders. So obviously a lot of factors to come into play, and the mines are where the mines are effectively. You can't pick and choose where you select these opportunities. So there's quite a lot of work goes into actually sifting through the various opportunities to get to the right one.
And with Sasa, you are putting in another tailings facility. Is that to help increase the life of mine as well?
We're doing a life of mine review of the whole of the Sasa project. The tailings facility was something which obviously you have to have a tailings facility and you have to look forward in terms of managing the tailings that come out of the flotation plant for the next number of years. We've more or less completed what we call TSF4, which will be our current tailings facility that we'll start using from this year, and that will have about a 7-year life to that tailings facility, and that's more or less completed now in terms of construction.
Oh, really? Okay, so that was H119 you were predicting that. So is it moving ahead of schedule then?
If I'm honest with you, it's probably slightly behind the original schedule, but we're well on track to, and it's materially complete. There was just an issue whereby the government insisted it was lined. With the weather conditions towards the back end of last year, we had to delay some of that work, and we'll recontinue that linings issue and that lining work in the spring when the weather improves, and we'll certainly have it finished this year ready for commissioning, and then that'll be available for the next 6 or 7 years use in terms of capacity for managing the tailings coming out of the flotation.
And you're also working on a resource upgrade for Sasa, is that correct?
Yes, we are. And in the Q1 this year, we'll come up with a resource update, hopefully earlier than the end of Q1, but the guys are well advanced in terms of that. And the focus of that particular work is really to take some of the inferred resources at the 2 or 3 ore bodies that we have at Sasa into indicated material and then take it into reserves, effectively to prove up our theory that we have a 20-year life of mine at Sasa.
Oh, well, that's a very good 20-year life of mine for sure. And you also consolidated your debt facility that you used to acquire Sasa. Is that to just make it easier for repayment in the future?
There was a number of reasons for that. When we acquired the mine, we had 2 debt facilities. We acquired a new debt package under Traxys, our offtake partner, for $120 million, and we acquired one that was already in place at Sasa, and that was a fairly complicated debt package, which we've managed to streamline and simplify, mainly to simplify our ownership structure and assist us with what we do in Macedonia. There were a few financial advantages, slightly lower interest rate on it, but one of the key things was that it did away with what's known as a cash sweep on that debt structure. So really it's just principal repayments have to be made back together with interest, and the cash sweep has disappeared. So yeah, there was a number of reasons for doing it, and it has certainly simplified our debt package that we own.
And then one of your projects, the Shook project, you've been doing some exploration on, but you've decided not to move forward with that, but you're retaining an NSR?
Yes, Shuak was another project we acquired before we acquired Sasa, actually, with some local partners in Kazakhstan. We had reasonable hopes for it because we thought we could develop maybe the oxide potential. Unfortunately, it was the quantum of oxide resource there. The grades were reasonable. They were between about 0.2 and 0.3%, which in Kazakhstan is certainly commercially viable. But the quantity of material that we found through the drilling program wasn't sufficient for us to justify continuing with it. So we took a board decision that we'd terminate that, we'd hand it back to the local partners, and we'll maintain a 1.25% net smelter royalty on it.
So you'll be declaring your next dividend very soon with your AGM?
We have our annual results coming out on April the 10th. We'll announce the dividend then, and then it'll be approved by the shareholders at the AGM, which is in May.
Excellent. And so what are your plans going forward for the rest of the year?
Rest of the year is obviously continue with managing and operating the Kounrad and Sasa operations, maintaining the low cost. Our production guidance for this year at Kounrad is 12,500 to 13,500 tonnes. At Sasa, it's 22,000 to 24,000 tonnes of zinc, which is a slight increase. And of lead, it's 28,000 to 30,000 tonnes, which is the same as 2018 on the lead. So that's the production guidance. We'll obviously work hard at maintaining the low costs and safety on site. And as I said before, we'll be refocusing our efforts on the business development front to see what is the next opportunity and the next asset potentially for Central Asia Metals to grow the business.
And will you be continuing to look for other assets close to your current projects, or are you sort of open-minded to other places?
What we never say never is a statement that my chairman would say. But clearly, to get assets in the local areas that we operate in, that we know how to operate in, particularly Kazakhstan, because we've operated there now for over 10 years, we've had assets in Kazakhstan. So that will probably be number one goal, copper in Kazakhstan, if I'm honest with you. In Macedonia and the Balkans region, we'll look there. But that wouldn't avoid us from looking in the rest of the world in areas that we could get comfortable with operating in. But it's clearly easier to find assets in countries where you know how to operate, I think it's fair to say, with a smallish management team.
And with your 39 million in cash that you had by the end of the year, I guess that is your treasure chest that you're saving up to use on your potential next acquisition?
Well, financing the next acquisition depends obviously on a number of factors in terms of how big that acquisition might be, whether we would raise equity such that it's not too dilutive for our current shareholders. We have the capacity to take on more debt. Our net debt, which we haven't advertised at the moment and we'll do on April the 10th with our financial results, having refinanced the debt we took on, the actual gross level of debt is $149 million as at the year end. And with $39 million in the bank, you can see that the net debt numbers come down to a number that's very manageable for us as a business. So we have capacity to take more debt on. We could raise equity. And the cash, we like to operate with an amount of cash in the bank for working capital reasons. So I don't see us necessarily dipping into that too much. It's a question of how much debt and how much equity would finance any next future acquisition, really.
Well, considering, the prospects for the company, the fact that your share price took a little bit of a dip at the end of the year, as all mining companies' share price did, you're looking like quite an attractive investment with such a good dividend yield and profit going forward.
Thank you. I mean, our business model is based around maintaining low-cost operations, such that whatever happens to the metal price, hopefully we can maintain a profitable business and operate within lower metal prices than maybe some other operators can't. So we have been affected by the reduction in metal prices over the course of the year and the macroeconomics, but we like to think that we've got a good business model moving forward.
Well, thank you very much for joining us, Nigel, and we look forward to hearing about your potentially new acquisition and the development of SASA and all of the good news that you have coming forward.
Okay, thank you. Thank you very much for your time, Bonnie.
And thank you very much for joining us on Blytheway Business News. Have a very profitable day.